Hey guys, so if you're watching this, you have to understand that starting out in trading can be really overwhelming. Now, in this video, we're going to be talking about 4 tools that will make your trading journey extremely simple. Okay, so now we need to understand that in order to optimize for success, we need to use the right tools. Now, the first right tool that you will need to use is what you're seeing over here, right? That will be my Trade Easy algorithm. Now, my Trade Easy algorithm, I'm going to keep it nice and simple and extremely concise. It gives you the daily bias, the weekly bias, the price phases, manipulation, distribution, accumulation, and also it'll give you the suggested entry points from which you can take a trade. Now, that essentially is a 90% done for you system already existing within your toolbox. Okay, so that's number one. Now, secondly, the most important, I'd say the second most important tool that you need is the economic calendar. Now, for instance, I use investing.com, right? Now, that is because in order to actually stay ahead of the crowd, you need to know fundamental analysis because the big boys, some people like to call it BFI, big financial institutions, some people say uh, large investors, so on and so forth. These guys, they will always focus on the big players. And these big players, what do they dabble in? They dabble in fundamental analysis. They look at interest rate, unemployment, inflation, so on and so forth. So the actual interest point for you would be to actually look at these data points and try to actually forecast yourself what price is going to do based on what expected result is being expected by the market or by different forecasts by different analysts from different institutions, right? Alternatively, you can do some other stuff, but I don't think you guys are privy to that level of information because this video is meant for beginners. Okay, so never fall into the trap of someone telling you fundamentals are not important. No, fundamentals are extremely important. And this is how, apart from Trade Easy using my algorithm, by understanding fundamentals and by actually incorporating fundamentals into your process of analysis, you are going to be ahead of 99% of the retail trading space. Okay. The only reason why 90 to 99% of retail traders fail is because they say, "Oh, I don't care about fundamental analysis." Well, clearly, if you don't care about fundamental analysis is not going to care about you, which is why it will always go and hit your stop. All right. Now, thirdly, of course, this is going to be a stupid obvious one. If you are super new to trading, you need a charting platform. So we use TradingView. And in TradingView, you can literally go and select any pair that you want to trade and you can go ahead and trade it. You can also connect your brokerage account to TradingView only and only if there is a compatibility between TradingView and your broker. There needs to be a compatibility connection between your broker and TradingView in order for you to trade on TradingView itself. So what I do is I connect my demo account from Pepperstone, and from that account, I connect it all to my live accounts. Why? Because when you are trading demo, the funny thing is sometimes, most of the time, trades just go your way. While if you trade with live, uh, don't even get me started. But for new guys, always start with demo. And if this entire psychological trick helps you, you can definitely trade on your demo and connect your demo to your live accounts via a trade copier. Okay. So more on that in another video, or you can definitely comment something down in the comment section below and I can suggest a trade copier that you can use. All right. So with TradingView, basically you have the ability to write out code, you have the ability to back test, you have the ability to model different strategies. And for back testing, you can easily go back to very specific dates or random dates and you can start practicing what you have learned. So it makes the entire process of trading and the entire process of studying extremely easy. But just because it makes the process of studying extremely easy, you also need to be exposed to the correct information, not the information that these 20-year-old gurus, self-proclaimed gurus, are giving you on the internet, or on YouTube, or even on X/Twitter. Okay. Always, always, always make sure that the person you are learning from can statistically back their own concepts. Now, I can say I can because all of this over here that you're seeing right now, everything is north of 80%, just based on the bias itself. But if I were to give you guys the statistics over a 20-year period of these biases playing out while having a position intraday, it goes to 100% because now we are not only dealing with how the day is going to close, we are dealing with how the day is going to close and or whether you were able to get a position in the direction of the bias given. Okay. So for instance, on Friday, on gold on Friday, the bias was bullish. Okay. And after the news driver, we just started going down. But that doesn't matter. Here's why. Now, if I switch this to bullish, okay, if I switch this to bullish and if I go to the 1 hour chart, because you're supposed to be viewing these signals on the 1 hour chart, right? You can see that if I took a buy, the chances or the percentage of price hitting at least the 50 pips is 100%. So from here, if I look for a 50 pip, it's 100%. The chances of price going 100 pips is also 100%. There you go. The chances of price going 200 pips now drops down to 80%, which you can see it never hit. You see that? Because now that hit the 20% region of failure. But I know that with my statistics, if I get the daily bias being bullish, and if I am looking to take a buy intraday, I am guaranteed to get a 50 to 100 pip move. Simple as that. Now, if you take a look at Bitcoin today, so right now we are in sells, as you can see by my annotations. So over here, what you can see is the bias, daily bias is bearish, and we got a sell signal, right? So now we already know just by looking at this, the day is going to close bearish. That's good. But what is the statistic of me being able to get 50 pips, 100 pips, 200 pips? Simple. From the point of sale over here, I'm interested in getting 50 pips. Done. 100% guarantee. I'm interested in getting 100 pips. Almost there. But still, 100% guarantee. Okay, it's going to come. It's going to hit that, right? But now, what if I want 200 pips? It has to go even lower, right? So then the act of getting 200 pips itself now goes down to 80%. So there is still an 80% probability of price dumping and hitting this level, 200 pips away from the entry point. Okay, so there is statistics backing everything I do now, which is why these things rarely fail with me. Okay, so that is that, right? So that's what you can do with TradingView. That's what you can do with my Trade Easy algorithm. And of course, you need to be able to understand how to utilize fundamentals by checking out the economic calendar. And you will also not want to trade CPI, NFP, FOMC because they are wildcard events that can cause whipsaws, which in turn will lead to you blowing your account. And if you get lucky, it's going to go really well, but you're not going to get lucky all the time. I am working on predictive analysis models that can help you actually trade these events, but don't expect it to come anytime soon. Okay. And the final tool that you should really invest in or develop for yourself is a risk management tool. Okay, that is because your stop loss determines the amount you'll lose. So if you have a 20 pip stop loss, your lot size is going to be a certain number. If you have a 40 pip stop loss, your lot size is going to be a specific number. So the lot size that you use, in case price hits stop loss, it should it should basically allow you to lose the amount you were prepared to lose. You do not want to lose more than what you were prepared to lose. Okay, so by using the risk management tool, or maybe even a website for risk management, there are so many websites to plug in your account value, the amount you want to risk, your stop loss size, and it'll output the lot size that you can use. Okay? So you can definitely go ahead and use those, or maybe you can download an expert advisor template or an indicator or a template, I don't know what it's called, and you can definitely install that on your MetaTrader 4 or 5, and you can manage your risk within the platform itself, within the trading platform itself. Okay, so that's pretty much it. So if you are a newbie, this video was for you. And if you are definitely looking to actually make good money without, wasting thousands and thousands and thousands of dollars with trial and errors and all these scam courses, you can definitely send me a message on Telegram and I can hook you up with this algorithm because I am running a lifetime offer right now. The 50% lifetime offer is done. We have 10 users already and they're loving it. Uh, so for all you other guys, the lifetime offer is still up until January 2025. Okay. So with that said, I hope you understood. I hope you found some value in this video, especially you as a newbie. If you're an advanced trader, I don't need to know what you think about this. All right, I'm just kidding. All right, so with that said, I hope you found this insightful. Good luck and good trading. I'll see you in the next one. Bye bye.